Hello, everyone. Robert here. Just wanted to share some news with you regarding the state of Connecticut's recent budget session. They have agreed to and have passed a budget that soon will be signed by the governor and put into law, focusing on fiscal years 2024 and 2025. And it's being dubbed as, here's the soundbite. Let me read it. The largest personal income tax cut in the state's history. Pretty bold, right? Also a pretty low bar because Connecticut rarely ever reduces taxes. But that was the goal, right? That was the promise. That was the goal, was to cut taxes for the middle class. They've achieved that. They've done it. I'm going to walk you through what it means and for who and how much, right? And I'll highlight a few things that are in there and a few things that are not. And just wanted to give you this overview so you're in the know on what to expect, because you'll start seeing articles and headlines about this huge, massive tax cut for the state of Connecticut. So the key here is they're lowering two of the tax brackets for state income tax. There's currently a 3% tax bracket. They're going to reduce that to 2%. And there's a 5% tax bracket. They'll reduce that tax rate to 4.5%, but only for people earning under certain income thresholds. So this is how they target it to the middle class, is the tax benefit itself will be capped for single filers making under $150,000 and joint filers making under $300,000. Anyone earning above those income thresholds do not get the advantage of those two reduced tax brackets. So pretty targeted on the income tax rates on those lowest two tax brackets. And then they're increasing the earned income tax credit as well for families with children. And for retirees, there used to be like a cliff. Like if your pension income was up to a certain amount, or your income was, I think it was $100,000, there's a cliff. Like if you made $100,001, you lose the whole benefit. So they took away the cliff, and they're going to make that a phasing so that more people will fall under that umbrella and capture some tax savings there for retirees. So I wanted to dive into where the big dollars are coming from in the bill, the ones that make it the largest personal income tax cut in Connecticut history. So if we focus on the two tax brackets we're talking about, this is for joint filers. This 3% tax bracket is for Connecticut income, the first $20,000 of Connecticut income, right? So they're going to reduce that tax bracket or tax rate from 3% to 2%. So 1% of $20,000 is $200. So some savings there. The next tax bracket is on earnings between $20,000 and $100,000. And that bracket, they want to reduce the rate, or they're going to reduce the rate from 5% to 4.5%. So 0.5% on the earnings or the income you report above 20,000 but below 100,000. So it's those two tax brackets that they're focused on. The other tax brackets do not change at all. Again, really targeting this to the middle class. So what does this mean to you in real dollars? They did release a few charts that will help us with that. So and I'll just give links to this below the video. So you could pick a line item here. Let's say you're a single filer making $50,000. The tax savings would be about $270 a year. So probably not so much money that you'll go out and change your payroll withholdings through your paychecks, or but still lower taxes are always going to be better than higher taxes, right? So, but you could see what they're doing here is really gearing the savings towards the lower your income is, the higher the percentage of your tax break is, and they phase it out all the way up to that $150,000 limit for single filers. And then there's a separate chart for joint filers here. I'll post this link too. But basically below joint filers below $80,000 will have a 15% or more tax cut at the state level. So pretty good savings. Max savings sort of lands right around $600, depending on what your income is. And then, no savings at all, again, if you're single earning over $150,000 or married filing joint with income over $300,000. So there's really two sets of tax brackets. Like people earning over those income limits do not get the new lowered 2% tax bracket and 4.5%. They're still going to pay 3% and 5%. So the software companies, tax software companies, kind of have to implement that and make sure we get those calculations right. But if you're landing right around one of those thresholds, it's going to be pretty important to try to maybe defer income or find ways to come in just below the threshold to save a little bit of extra tax at the state level. Quick summary here. They gave kind of a breakdown of where the dollars or savings are coming from. I'm going to blow this up a little bit, make it a little easier to read, and try to get my face out of the way. There. So the big dollar savings really are the lowering those two tax brackets. That's where the big dollars or the tax cuts really coming from. A few other items on here that won't help too many people out because they're very specific. The one I'm going to focus on is because in our firm, our office, we're really trying to help business owners mostly. And they did make, right? So one positive is they took the pass-through entity tax. This pertains to partnerships and S corporations, where in previous years, you have this mandatory pass-through entity income tax that you pay in Connecticut. It's supposed to be a workaround to help you save money on your federal tax returns because of the state and local tax deduction limit of $10,000. But because they made this mandatory in Connecticut, we have very small partnership and S corporation clients. Maybe they make a $10,000 profit this year, and they have to go calculate the $700 pass-through entity tax that they pay into Connecticut. And by the time that $700 deduction makes it to their federal tax return, they save, $65, $70 of taxes. But they have to pay us $300 to $500 just to calculate it. I like the idea of making the pass-through entity tax optional in Connecticut starting in 2024. Not really because of a tax impact, but for compliance costs. So less work for me, less fees for you if you're a very small partnership or S corp operating in Connecticut. So I like that idea. I think they could have taken it a little bit further. Connecticut's one of the only states in the country that has a pass-through entity tax and actually skims some of the money for themselves. So in Connecticut, you pay $1 of pass-through entity tax. They keep 12.5 cents for themselves, and they give you 87.5 cents of your own money back to you as a credit on the Connecticut tax return. Every other state pretty much gives you the whole dollar back. I was hoping that they would make an adjustment there and help some of our business owner clients out. They did not. So the only relief there for pretty much our clients or business owners is going to be making some of that optional for the smaller partnerships or S corporations. Anyone large enough I guess with profits large enough, there's still tax savings involved, so you still want to take advantage of it. But I like the idea that it's optional now. So quick overview, that's the rundown. You probably see articles and headlines and announcements about this huge tax cut. Wanted to make sure you heard it from me. So I hope that helps. I'll put some links below the video. Have a good day, and I'll talk to you soon.